Santa can't seem to make up his mind this year, and the market can't make its mind up either. So let's take a look at what's going on here with the markets today. Markets came back. I tweeted out earlier that I was not expecting the selling that we saw today to take place. The market was down over 700 points on the Dow at one point, and came back to down only 1% at 348 points. S&P down 1.45%, NASDAQ down 2.18%. NASDAQ was down as much as 3% at one point today. So market snapped back pretty good into the close. And I think, potentially what was going on today was a little bit of tax harvesting, tax loss selling going on, where investors can sell and then buy back other stocks. So some of that could have been the contributing factor. Also, again, just setting the table to drive profits for fund managers, hedge funds. They make their money on price movement because we are in a bear market. So even though I've been looking for a Santa rally, like I said, on the traditional markets, we'll jump in there in just a second, of 5 to 7%, somewhere in there, maybe 10%, possibly 10 to 15% on Bitcoin. We are still in a bear market. That is just a Santa rally, a bear market rally for more continuation to the downside, like I've been talking about. We'll go back and look at the charts here in a second. But Sam Bankman-Fried is in the U.S. to be released on $250 million in bail, due back in court on January the 3rd. The expectation is, because there are his former CFO and co-founder have testified, well, I guess have cut a deal to testify against him or have given up information. He may cut a deal himself and just go ahead and plead guilty and take a plea deal. So we'll see how that shakes out. He may not actually go to trial. He just might make a plea deal and just end up going straight to jail. So we will see how that transpires and what the outcome is. But right now, released on bail. So interesting news in the crypto space there. But as far as stocks go, let's take a quick look. This is that trend line I've been watching on the Dow, and it did find support here. And again, what I've been talking about is obviously, looking for that Santa Claus rally, but ultimately what we're expecting is a potential rally up into this area, and then for the Dow to kind of continue potentially down this trend. Maybe it goes back underneath at some point and kind of does that, because we are still in a bear market rally, or bear market. I do fully expect to retest these October lows here that the Dow, went below a little bit, but found support on before that last big rally where this was the safety trade where a lot of capital went into the Dow, industrials and dividend stocks for a safety trade, while the other markets did not rally so well. Let's take a look at the averages here. That's also the 200-day moving average that the Dow is finding support on. So what you can expect possibly tomorrow is, flat to maybe a little bit more selling going on. And then the rally potential is there for next week. It's only a 4-day week, and then rolling over after that. And we'll take a look at why I'm saying that here in a minute, just based on historical precedents. The NASDAQ has not been able to get back above the 100 or 200, below the 50-day as well right now, and working its way back to that October low. So again, if NASDAQ was to bounce from here 7%, almost back to the trend right up in this area, kind of like we've seen before, working its way, rallying up to that 100-day. The blue line is the 100-day moving average, and then ultimately rolling over again. And then the S&P, same thing, below that 50-day and rejecting off the 200. So a rally up to the 200 would be around 4 or 5%. Up to the trend, maybe a little bit above, would be more like a 7% rally from here. So you could potentially see, that's about 6%, 5-6%. So you could potentially see more downside tomorrow, and then next week markets will be closed Monday after Christmas. So Tuesday through Friday we'll be trading. Next week, the following week, the Monday after New Year's, the market's closed. So 2 4-day weeks coming up. So likely to see some light volume with people taking off next week after Christmas, and again, expecting to see a little rally and then rolling over going into the first of the year and continuing down to retest this October low. And I do believe that we are still in a bear market, and that the markets are definitely going to go down and retest those October lows. So let's take a look at why I'm saying what I'm expecting. And as you can see here, this was 16th of December. He had about 3 or 4 days of really bad down days till the 20th of December. And then markets kind of marched all the way up into the 27th of December, then kind of ranged and then rolled over after the first of the year, and then kind of continued that first big drop in the markets last year. If we look at 2018, 2019, when the Fed first started tightening, and back in here, it was around January of 2018, the Fed started tightening. And then right in this area, as the credit market started cracking, that's what this was all about. The Fed pivoted right in this area, and markets went on to rally from there. And I'm not expecting anything like this. This was bull market. This was Fed pivot. This was, low interest rate, QE still happening, buying government debt, buying mortgage-backed securities, artificially low interest rates, in the 3s and 4s back in this area, not in the 2s yet, because the pandemic was yet to come. And then, of course, liquidity there. So let's go back and look at the other big events in the past history of bear markets. And this is 2009. This is early in 2009 when things started happening. This was not the Lehman failure yet. I'll show you that. But this was the Santa Claus rally in 2009 before a big drop. So kind of maybe you could kind of equate that to where we are right now, where the markets were down a little bit up until the 18th or 19th and started working their way up. And then by the 20th of December, just started rolling over. And then down in this area, after it found a little consolidation, before that big final capitulation, Lehman was right in here as the market fell. Even after Lehman fell and it looked like it was lights out, I remember this time frame. This was when I first really started paying attention to the markets and getting ready to do some things, was right in this area, December of 2008. I didn't get in until the bottom of 2009, but I started watching and studying, didn't know a thing about the markets, had never invested in stocks before. And a friend of mine kind of brought my attention to the opportunity that was coming. So I was paying attention here, and everybody was talking about this Santa Claus rally thing. What's this Santa Claus rally? And what really promotes that is obviously Wall Street wanting to get their bonuses, but also tax loss harvesting, where there's a lot of selling and then a lot of buying back, which drives some momentum, because it takes a lot of money to drive a stock up. And then when it reverses the other way and starts to evacuate, that's a lot of money coming out of the market as well. So this wasn't a huge rally back in 2018, 2019 timeframe, or 2008, December. This was 16th, 17th of 2008, kind of fell right here. This is the 23rd, and then rallied into the end of the year, into January, then ultimately rolled over to that bottom right here in March. And what saved the market here, that March bottom, was the Fed stepping in, Treasury stepping in with TARP, toxic asset repurchase program, bailouts, all that kind of stuff, bailing banks out, bailing companies out, purchasing toxic assets, all that stuff. QE was set into motion, and then it was just off to the races. Not completely from there, but as you can see, the thing about all this is that, number one, you don't fight the Fed, right? When the Fed is pumping liquidity into the market, then the market is bullish, right? So you don't want to be bearish when the Fed is lowering interest rates, keeping rates low, and buying bonds, buying mortgage-backed securities, treasuries, propping markets up. I mean, you just don't want to be bearish when that happens. Of course, you can have events like, the pandemic. This area here can happen. You can have bank failures, which obviously this was our QE, but you can see from the bottom of 2009, when the Fed jumped in and started juicing the markets, low interest rates and pumping liquidity in the markets, it's pretty much just straight up. So you don't want to fight the Fed along the way, but there are, hiccups along the way, but generally the markets 70 to 80% of the time are up. So that's when it's time to be a bull. Don't fight the Fed on the way up. And if you believe that you don't fight the Fed on the way up, then you have to believe you don't fight the Fed on the way down. So the Fed was loosening, juicing the markets, pumping liquidity, keeping rates low. Bull market, don't fight the Fed. Fed is raising rates, pulling liquidity out of the market, pulling and draining liquidity out of the market. Don't fight the Fed. There are going to be nice rallies, and you get really big, rallies in a bear market. But this is, let's just even make it easier. And let's turn the noise off. And you can clearly see on every asset, every market, it's a clearly defined bear market macro downtrend. Let's take a look at Bitcoin. And you just don't fight the Fed on this. and you can kind of see where we're at, what this looks like. And you can also see the major structural levels of support, right? So right in this area here for Bitcoin, you have major market structural support right there. So that's where markets you can expect to hold up. That's in that $10,000 to $11,000 range. And you have to expect markets to retreat to that level. And if it did, what would that ultimately be? Right around, 80%, 85% would be from the all-time high down to about 10,000. So 80 to 85% down is $10,000. Right now, the market's only dropped about 70% from the all-time high. Let's look at that again. Down to where we're at now, 75%. So the market could potentially drop, again from here down to that level. And what would that be from here to drop down to 10,000? That would be to 10,000 even. That would be another 38% drop from where we are right now to get to that major market structural level of support. The Dow, where do you see a similar type of market support? Kind of right in this area here. So again, retesting that low from October, November. If you go to the NASDAQ, you can kind of see same thing. NASDAQ is kind of on that level right now, where you have some structural support right in this area, working its way down to kind of test that. That wasn't a great line right there, but basically kind of same thing. It's kind of in that area where it's testing that support level. And the next stop is those 2000 or 2019 highs or 2020 highs before the pandemic is where your next levels of support are. But obviously these October lows are next up to be tested. We'll see if we can find support there. But if recession plays out like markets are fearing, then the potential is markets will go much lower. Let's take a look at Bitcoin here real quick, and we'll get rid of this little trend line here, and we'll put some moving averages on there. Let's remove that. And let's put the averages on. So as you can see, still below that 200-day moving average, working on this 200 week, I'm on the weekly chart here, moving on this 50 to 200-day death cross, and 50 to 200 week, this is the weekly chart. These are weekly moving average, 50 and 200 getting ready to cross. We haven't had that in Bitcoin, but we've seen it in traditional markets. Generally, markets are going to drop a little bit lower on that. But again, these are all lagging indicators. If price all of a sudden flipped and turned around, then these averages would kind of, just roll right over, move right on up with the price action like we saw, kind of right in this area here. So the likelihood of that happening is pretty slim at this point in the game with, the conditions that we're in, again, with liquidity, bear market, things like that. So right now, what we can expect is, and what I'm looking for, and you never know what's going to happen, but potentially down to flat tomorrow, maybe a little bit of a rebound. But next week, the last 4 days of December, I fully expect a rally of 5 to 7% in the traditional markets, maybe 10, and maybe 10 to 15 in Bitcoin and crypto. They've been running flat while the markets have been going crazy, kind of reversing roles. The markets look like crypto and Bitcoin and crypto look like traditional markets, kind of staying flat. So we'll see what that looks like next week. These are the things I'm looking at and expecting. I'll see you in the next video.